As an insurance advisor specializing in life insurance, I've heard all sorts of things about infinite banking, IBC, becoming your own banker, what have you. And in this video, I'm going to be walking through an article that I had written that kind of is giving my reflection on people that I've seen do it right and people that I've seen have the wrong kind of perspective on it. And so without further ado, let's hop into it. One of the things that I've noticed over the years is that many people seem to believe that infinite banking is what creates wealth. And I understand why, frankly. Because if you spend enough time online, you'll eventually encounter business owners, real estate investors, entrepreneurs, and families who have accumulated significant wealth while utilizing the strategy. And eventually what happens for a lot of people is that there's this subtle shift that starts to happen in their mind, right? People stop viewing infinite banking as a tool and begin viewing it as the source of wealth itself, okay? Now, the more conversations I have, however, the more that I think that's a little bit backwards, okay? In my experience, infinite banking is not what creates wealth. It helps people become more intentional. I think that matters a whole lot. Help people become more intentional with the wealth that they're already creating. So more intentional about the wealth they're already creating. And I'll explain that a little bit more. I'll expound upon that a little bit more throughout the rest of this article. Now, before going any further though, it's probably helpful to define what I personally mean by infinite banking, right? And so at its core, infinite banking is the strategy that utilizes specially designed whole life insurance to help people control and direct the flows, right? Control is key and direction of flow is key of the money throughout their lives, okay? Now, the policy is the tool. Again, overfunded, high cash value, whole life insurance policy designed for high cash value, okay? So the policy is the tool. The strategy is the process. While there are many ways to implement it, the basic idea is that instead of always relying on outside lenders, a person builds a pool of capital inside of a policy, and then they can access that capital through policy loans while continuing to fund the system the entire time. So the cool thing about it all is that you have money growing in the background the entire time. Like, I think that matters more than anything. Is like you're having money grow in the background the whole time while you're also utilizing that capital along the way, okay? And so the reason I find the concept interesting has little to do with the phrase, quote unquote, becoming your own bank. And I understand where that comes from and everything like that. And I'm a proponent of it. But the reason I find the concept interesting has very little to do with that phrase, okay? What interests me is how it changes the way people think about money. And by people, I mean many people who are doing the research, myself included, when it comes to the way that we look at it, right? Now, unfortunately, I think that's also where many people get a little bit confused. The people I see benefiting the most from infinite banking were usually doing well long before they ever purchased a policy. They were already creating value. They were already generating income. They were saving money. They were investing already. They were already building businesses and acquiring assets or creating opportunities for themselves and their families. And in other words, the wealth creation was already happening, okay? The policy is not what created that. And that's really the point that I'm trying to drive home in this particular video here, is that infinite banking in and of itself does not create the wealth. It might be a little bit more efficient way to do it in certain circumstances, but it's not the thing itself that creates the wealth, okay? What you're able to do and provide value for others and create revenue and income from, that is what creates the value, and that's what creates the wealth that people see. And like many of the people that you see online talking about infinite banking and showing off flashy stuff or whatever that may be, they've created value in some other way in order to acquire that. It wasn't the process of infinite banking that necessarily created that in and of itself, okay? Again, it was the person that created that, right? And so to illustrate what I mean, just imagine we have two individuals here, okay? Like, both are earning a strong income, both save about $40,000 a year, both are very disciplined, both invest, both of them are gonna be buying vehicles, they're pursuing opportunities when they arise, both of them are doing that. And so over the course of 20 years, each person directs a total of $800,000 towards their financial future, okay? And so $40,000 a year for 20 years, $800,000, okay? 10 years into the journey, both individuals identify the same opportunity, and it so happens to be a rental property that they're gonna acquire with $100,000, okay? So person A, they withdraw $100,000 from a savings account and they purchase the property. Person B, on the other hand, they access $100,000 through a policy loan and purchases the exact same property, all right? Now, let's assume both individuals ultimately own the same property, right? They receive the same rental income and they experience the same appreciation over time. So the question is, what was it that created the wealth? Okay, what was it that created the wealth? It was not the policy. No, it was not. It was not the policy. It was not a loan. It was not the financing method. It was none of that, right? The rental property may have contributed to the wealth creation. That may have been the main thing. Cash flow generated by the property may have contributed to the wealth creation as well, okay? All of that makes sense, okay? The individual's ability to identify and act on the opportunity may have also contributed to the wealth creation. So the policy simply helped facilitate the transaction. Like, that's the important distinction that I want to make here, right? Because many people mistakenly contribute or attribute the wealth to the strategy itself. Again, the strategy did not create the opportunity. That person went to go find the opportunity. The strategy did not create the cash flow. The strategy didn't create the appreciation. The strategy helped one individual access capital just differently, right? This is a different way of looking at things, while simultaneously continuing to build another asset at the exact same time. Now, the asset that I'm talking about is the cash value within a whole life insurance policy that's growing, again, in the background the entire time. Now, based on a real illustration, and I kind of saved you from having to look at the really long chart and all these numbers that are on the screen, but I drafted an illustration for you guys for the purpose of making this video. And based on the real illustration, someone contributing $40,000 annually into a policy for 20 years would contribute, again, $800,000. Now, by year 20, that policy may project around $1.3 million. A little bit over that is what I saw in the illustration. And that's going to be in cash value in and of itself. And the death benefit, that was looking at around $2.4 million of death benefit for that person. Now, these numbers are real. These numbers are meaningful, but they also highlight something very important. The policy didn't create the $800,000 that it funded, right? The policy did not create the $800,000 that it funded. I want you to hear me when I say that, okay? It was the person that did that. It was the person that created the $800,000. The policy didn't create the discipline. This is a huge component of all of this when it comes to infinite banking, is having the discipline to see it through, see the whole process in and of itself through. But the policy didn't create the discipline required to fund it for 20 years, okay? The person did, okay? The policy didn't create the opportunities and the investments or the income that made the strategy itself possible, okay? What it did create was another asset. Now that's a distinction I think many people miss, right? Person A and person B may both become wealthy, and person A may have accumulated investment assets and whatever cash remains from their financial decisions. Person B may have accumulated many of those same assets while simultaneously building more than $1 million in policy cash value over time, a multi-million-dollar death benefit, okay? Living benefits that also come along with that outside of the cash value in and of itself, and an additional pool of capital that may continue serving multiple purposes that, again, has been growing in the background the entire time, even while he uses it, okay? And so the difference isn't necessarily that one person became wealthy and the other didn't. That's not what I'm really saying, right? Both of them ended up becoming wealthy. The difference is that one person intentionally built another asset while becoming wealthy along the way. One of the things I think people underestimate about infinite banking is that it isn't an event, right? I would call it a process. It's not like you fund a policy one time and that's it. I'm now doing infinite banking. That's not necessarily what's going on here. It is a process of infinite banking and just the flow of money and how you go about utilizing capital, right? The first premium payment doesn't create an infinite banking system any more than the first contribution to a 401k creates retirement, okay? So the power comes from the repetition, okay? The power comes from the continued funding, right? The power comes from the time and the discipline. And frankly, I think the discipline may be one of the most valuable aspects of the entire strategy, right? Because when someone decides to implement infinite banking, they're often making a commitment to save consistently, think very intentionally. Okay, this is really important. They're saving consistently, they're thinking intentionally about the capital, and they become way more deliberate about how money flows through their life. And in many cases, that behavioral shift may just be as important as the policy itself, okay? And of course, none of this means policy loans are free or that loan interest should be ignored, because it absolutely shouldn't. Policy loan interest is a real consideration and should be evaluated very carefully. Some people choose to repay loans aggressively, others prioritize flexibility and repay them differently. Every implementation has trade-offs. And the reason I haven't focused heavily on loan interest in this article and in this video is because it isn't central to the point that I'm ultimately making here, okay? Whether someone finances through a bank or pays cash, they utilize policy loans, or they choose some sort of combination of the three, the larger question ultimately still remains the same. Did the strategy help them create, control, perpetuate more wealth than they otherwise would have? That's the question that we have to consider here, right? Did the strategy help them create, control, and perpetuate more wealth than they otherwise would have, okay? I've also noticed that many critics and advocates, like both of them, critics and advocates, end up talking right past each other, okay? Which I think is almost hilarious, kind of comical when you think about that. But it's also kind of sad because people don't listen to each other very well. But anyways, critics often focus on loan interest and policy expenses and opportunity costs, where advocates often focus on control and flexibility and liquidity and long-term wealth transfer. And I think both of them are right in their own ways, right? Because it's just going to be a matter of like how you're looking at it and what you value from the very beginning as it stands, right? And so the reality is that both sides are often discussing different things, and that's the sad reality of it all, okay? If someone believes infinite banking is this magical wealth creation machine, they're likely going to be disappointed. That's just is what it is, okay? Now, if someone understands that it's a long-term strategy for controlling capital, building an additional asset, improving flexibility, and perpetuating wealth across generations, I think that goes underlooked as well. They're evaluating it through completely different lenses, right? That's why I don't think that the most important question is, will infinite banking make me wealthy? I don't think that's a really good question at all, frankly. The better question might be, am I already creating wealth? And is there a more intentional way to manage, protect, and perpetuate it, right? Perhaps there might be. And so that's a very different conversation, right? And in my experience, it's usually the people who ask that second question who get the most value, the most fulfillment out of the strategy in and of itself. Not because the policy created wealth, that's not what we're getting at here, but because it helped them become way more intentional with the wealth that they were already creating from the very beginning, right? And one last thing I'll say here as well. Not everyone is trying to solve the same financial problem. Not everyone's even exploring infinite banking per se, but people may be exploring high cash value, overfunded whole life insurance for other reasons. And so some people are focusing on retirement income, others are focused on liquidity and flexibility and business opportunities, or maybe even just legacy planning. And if you're trying to determine which priorities matter most in your situation, I've put together a short assessment that helps you identify your starting point. And you can find it below. So thanks for watching. I'll see you in the next one.